Hi, welcome back to Bazaar Morning Call. It's the last day of the week. It's Friday and the SGX Nifty is promising a higher opening. It's up almost about 40 odd points at 10,271 against the Nifty July futures of 10,231. So let's see how things shape up. Our research team is here to give you the list of top 10 stocks as we kickstart trade this morning. Hi guys, good morning. Anuj, let me start with you. What would you be looking at today?
Well, Sonia, a couple of FMCG stocks are making a big comeback. Lever, it looks like, has bottomed out after that correction, and that yesterday crossed some very important moving averages. So that's my first stock to watch. Saw a lot of delivery buying as well. And I think the stock that's really making a big comeback is ITC. I know it's numbers, so perhaps there could be some volatility, but the way the stock's been rising over the last 3-4 days, it's indicating perhaps something big over there. So that's another stock that I'll track today.
Okay, thanks for that. But Sonia, I want to hear you on Ashok Leyland. Losses, yes, but they seemed less than expected.
No, in fact, they were higher than expected, Lata. Actually, the range that we were working with was about 45 to 55 odd crores in all the brokerages that I saw. The company reported a loss at 57 crores. Remember, they made a profit of 650 crores same time last year. From that to move to a loss. In any case, the management commentary was also quite subdued. I'll tell you about that in a bit. The margins fell 630 basis points year on year at 4.8%. The revenue was down 56% because the volumes itself were down 60% in medium and heavy commercial vehicles. The management said that they are focusing on improving cash flows and conserving resources, but it has been a very challenging year for them.
Okay, Sonia, thanks a lot for that. Well, we'll keep an eye on Ashok Leyland. Let's see how much is in the price. Nupur will tell us more about Apollo Hospitals. Those numbers looked quite okay.
Well, good numbers reported by Apollo Hospitals in terms of revenue growth as well as operating profits, but margins were under pressure and profit includes one-time exceptional gains of around 108 crores on sale proceeds received from its insurance business, but revenues up 17%, Street was estimating 10% revenues growth, operating profits up 14.5%, margins came in at just 10.9% versus 11.2% same period last year, but Street was estimating flat margins of 11% in Q4. But from balance sheet side, company managed to repay some of its borrowing. It came in at just 3,280 crores versus 3,400 crores same period last year. So some good news from there as well. But all three business segments did well. Hospital business revenues up 5%, pharmacy revenues up 33%, clinical revenues up 21%. But from their press release, management indicated that FY21 will be a challenging year. So we'll watch out for that. But keep an eye on Apollo Hospitals.
Okay, it could be one of the stocks of the day. Good numbers coming in. Thanks, Nupur, for that. Well, moving on, Mangalam is here to tell us how Concor did this quarter around. Mangalam.
Well, for Concor, the operational performance was a beat. The revenues were down by 10%. The management attributed COVID impact to about 9% of this 10% decline. The EBITDA jumped by 24%. That means the margins jumped by over 900 basis points. And that was because of a surprising dip of 45% in the company's employee expenditure. So this is something that we'll ask the management and see what comments they have to offer with regards to this decline. And the other income came in lower. There was an exceptional, as a result of which the net profit also fell by about 16%. The stock usually does not move on numbers. The bigger triggers for Container Corp are, one, the DFC commissioning, and second would be privatization. Any word on that are the big triggers for the stock. Ended higher yesterday, may see some light green today.
Okay, thanks for that, Mangalam. Sorry if I disturbed you. Okay, let's get to Anisha. Anisha, Accenture results were announced. Can you tell us what they meant for, what they will mean for IT stocks today?
Well, Lata, hopefully it will mean good news for Indian IT companies because the Q3 numbers reported by Accenture were better than street estimates, and also the management commentary is rather reassuring. In fact, they talk about stronger bookings happening in Q4, and that is something that should bode well for the Indian IT industry as well. CLSA, for example, says that the management commentary was assuring. They like the fact that the deal cancellations were very limited, and the company has indicated an improving operating environment and strong deal pipeline, and that is the good news that we all can deal with. So perhaps a green tick for all the Indian IT companies today.
Okay, all the Indian IT stocks perhaps could do well today. That's the thought process. Let's see. But back to Sonia on some news on Reliance.
Well, there's positive news coming in on Reliance, Anuj. So Fitch has affirmed Reliance's long-term foreign currency issuer rating at BBB-. So they've come out with an outlook which is stable. So they've affirmed the stable outlook for Reliance's long-term rating. They say this is because of an improvement in Reliance's financial profile. The net debt reduction underpinned by proceeds from a stake sale in Jio are the two big positives. They also forecast that Reliance's net debt to EBITDA will fall to 0.6 times in FY21 from 2.3 times in FY20, and they forecast a positive free cash flow during the financial year ending March 2021 as well. So this affirmation of the long-term foreign currency issuer rating at BBB- is something that could keep the stock afloat today. Standard disclaimer though, Reliance Industries is the owner of the channel that you're watching currently.
As always, rating agencies are the last to climb bonds, so I don't know if this will have much of an impact. Everybody knows that they are now, debt-free. They've made that announcement to the exchange. So, what are the rating agencies telling us? This is absolutely uncalled for. Well, let's get to the results analysis again. Nigel, you have a bunch of numbers on your radar.
Well, that's right, Lata. Let's start off with IOB. They delivered their first net profit in the last 19, so good news coming in from there. Not just that, even their asset quality improved to sub 15% from around 17.5% odd. That's the best we've seen the last 17 quarters odd. So that stock should open up in the green. Next, we move to Somani Ceramics. Out there, the numbers didn't look very, very good. There was a volume decline of close to around 28%. There was a degrowth in terms of their revenue to the tune of around 30% odd. And just take a look at their margins. It's compressed by, from around 13% to sub 4%. So that stock should open up in the red. It's an absolute washout quarter that you've seen. For Star Cement, well, there was some kind of growth on the top line. There was a 3% growth on the top line. The margins on a year-on-year basis, there was some compression. But what I liked about the numbers is that, in fact, there's an improvement on a sequential basis. So going with the thumbs up because it has a clean balance sheet and leadership in Northeast. Finally, Galaxy Surfactants out there. In this sort of environment, you're giving a EBITDA growth of close to around 8%, and the margins improved to around 15.5% odd. That's 150 basis points improvement on a year-on-year basis. So going with green out there as well. Back to you all.
Okay, Nigel, thanks a lot for that. Well, we have Anisha back with us for some more results. Anisha?
Oh, well, yes, Anuj, now we know why Engineers India was rallying in trade yesterday. It's a good set of numbers reported by the company. The profit jumped up by 35% and the revenue is up around 40%. However, similar story cannot be said for Prince Pipes as well, wherein the profit is down 6% and the revenue is down 14%. For Ion Exchange as well, the net profit is down 20% and a revenue decline of around 19%. Insecticides India is a tad bit of mixed set because the revenue is actually up around 20%, but the company has reported a net loss versus a profit last year, and that is because of higher inventory as well as higher other costs. Separately, if you look at Varroc Engineering, the company reported a net loss of a whopping 140 crore rupees, and that compares to a profit of 130 crores. So a big gap as far as the performance of the company is concerned, and that is led by the revenue decline of 13%. Lastly, on Endurance Tech, the profit is down 28%, revenue down 16%, so red tick there as well. Back to you.
All right, Anisha, thanks a lot for that. But the other big story that we're tracking is India holding up Chinese imports after the deadly border clash that we've seen. Lata, what do you think are the sectors or the stocks that could get impacted because of this?
Well, it's really difficult to bring it down to stocks. The macro number is 70 billion of imports for FY19. That is the last year for which I could get data. And industry-wise, if you looked at it, chemicals and dyes, it's about a 13 billion, chemicals, dyes, organic chemicals, inorganic chemicals, the whole thing is about $13 billion. Electronics, our imports is about $22 billion. And auto parts and transportation equipment is about $2-3 billion. So if you looked at it that way, then electronics companies, Amber and Dixon perhaps should be impacted. They are the just-in-time makers. It's possible that Bajaj Electricals, Havells kind of people are going to get impacted. I'm looking at consumer electronics. And then if it's transportation, then the auto stocks are big. Even if the amount would be maybe 7-8%, Mr. Bhargav told us that even those small components can hold up production. It's only 5 days, but there could be a sentiment negative on all these stocks. Okay, well, that's the list of stocks that we have on our radar. We're going to take a break and come back with an expert. Amisha Vora of Prabhudas Lilladher joins in to analyze some of the stocks that are in news today.